Physically backed commodity exchange traded products, ETPs, are a unique way for investors to gain exposure to commodity markets. Let's explore their structure and how they function. How ETPs work. All ETPs are designed to expose investors to an underlying asset or benchmark. To achieve this, ETPs rely on either physically or synthetically. Physical replication. When an ETP is physically backed, the issuer uses investor funds to purchase the actual underlying assets. However, this method is not always feasible for all commodities due to practical challenges such as high storage costs, extensive infrastructure requirements, and perishability in the case of agricultural products. For this reason, physical replication is mostly reserved for certain precious metals such as gold, silver, platinum, and palladium. These metals are easier to store, cost-efficient, and non-perishable. Key features of physically backed commodity ETPs. Convenience without physical delivery. Physically backed commodity ETPs allow investors to benefit from price movements in metals without needing to take physical delivery. The metals are securely stored in vaults managed by custodian banks specializing in asset protection. Option for delivery. Some precious metal ETPs provide the option for investors to take delivery of the underlying metal if desired. Standards and quality assurance. The stored metals adhere to strict quality standards set by international trade associations such as the London Bullion Market Association, LBMA, the London Platinum and Palladium Market, LPPM, and the London Metal Exchange, LME. These standards ensure that investors' holdings meet the highest quality benchmarks. Value and security of physically backed ETPs. The value of a physically backed ETP corresponds to its entitlement to a specific amount of the underlying metal. For instance, an entitlement of 0.1 means that each ETP security represents 1/10 of an ounce of metal. Additionally, investors benefit from a secure structure where an independent trustee owns the metal. Even in the event of an issuer default, the trustee holds the metal on behalf of investors and liquidates it, distributing proceeds accordingly. Conclusion. Physically backed commodity ETPs offer investors a reliable way to access commodity markets. They combine the benefits of price exposure with the assurance of high-quality, securely stored physical assets.